Life insurance offers two types of categories: savings and investments. Increasingly, many are shifting towards investments that offer stable returns in the long run while also providing the assurance of life coverage. This is where unit linked insurance plans, or ULIPs as they are popularly known, are steadily emerging as the preferred choice for many, as they combine the benefits of both. However, misinformation or incomplete information and unfounded myths can significantly damage a product or service. That is precisely what has happened in the case of ULIPs. Hey, I'm Swapna Neel, your host for this episode of Financially Speaking, conversations powered by India First Life. To gain a clear understanding of what ULIP plans are, I've reached out to Dr. Poonam Tandon. Dr. Poonam Tandon is the Chief Investment Officer at India First Life Insurance. She has over 30 years of experience in the financial sector. Welcome, Poonam.
Thank you, Swapnanil. I am happy to help you understand the importance of ULIP policies and points to consider before purchasing the same.
Great. So let's get started, Poonam. Firstly, what exactly is a ULIP?
So, ULIP, as you said, is a unit linked insurance policy. It is a versatile insurance product that provides insurance and investment in asset classes of choice, that is, equity, debt, or hybrid. So the fund options therefore range from high risk to low risk. The policyholder must pay premiums regularly. A small portion of the premium goes towards insurance or mortality charges, and the rest of the premium is invested in the markets. So, life cover, wealth creation, and tax saving, as well as transparency, are the cornerstones of the ULIPs, which make them an attractive proposition.
Wow, that sounds like a great product. But then, Poonam, why are people so skeptical about investing in ULIPs?
Swapnanil, this is also due to many myths which are floating around. In fact, these myths often cause individuals to surrender their policies before it realizes its true potential and they lose out on all the benefits. There are a few important things that you must consider while purchasing ULIPs. So, the first thing is that investments are made subject to risks associated with financial markets. So, it's like suppose you put in 1,000 rupees, maybe the markets go down a little, it comes down to 990 rupees tomorrow, and maybe after a year or so, it may go up to 1,500 also. So, and it keeps growing over time, but in between, tomorrow, say after a year, it's 1,500, it could the next year go down to 1,300, then again, it may go up to 2,000, and so on. And this is how it keeps increasing, and it is volatile, and therefore, the investment risk is borne by the policy holder, and therefore only people with slightly longer term horizon needs to invest in this product. Like, say, suppose a person who has a child's education in as an objective, say, and the child is only 5 years old and he needs the money, say, at the end when the child is 18 or 20, he can start investing in ULIPs today and see his money grow over a period of time, along with the fact that his life insurance is also taken care of. So therefore you should also make your investment choice after considering your risk appetite and your needs. So this is the second point I would like to highlight. And the third would be the type of funds you invest in. Now you have got two asset classes and a mix of both. So one is a equity fund, the other is a debt fund, and the third is a balanced, which is a mix of equity and debt, and the fourth is a money market fund, which is a very short term kind of a fund. Now, equity fund will give you inflation beating returns, but it is very volatile also. So, short term volatility one will have to encounter in this fund, but it will give you long term very high inflation beating returns. While a debt fund will give you stable returns, but not very high returns. And a balance gives you a mix of both. So, these are the different types of funds which one can look at the time of investing. Now, fourth is also the flexibility for switching among the funds. Now, what happens is that if you started with equity, there may be people who may like to keep booking profits and going into debt to be on the safer side, and therefore could do these kind of switches. Or there could be people who understand markets and who have a view that maybe the equity has kind of peaked out and I should now shift into debt, from debt to equity, because now the equity markets look good. So this kind of flexibility or switching is also given in the ULIPs. And it is free of cost, and also there are no tax implications in this flexibility of switching. Also, partial withdrawal or liquidity benefit is also given in ULIPs if there is a requirement somewhere, sometime one can withdraw. However, that is with respect to the product guidelines we'll have to look at the time of withdrawal.
Okay, all right. Right now, I'm at this stage where I really want to invest in a ULIP plan. But I've heard around there are a lot of myths, as you said, about ULIP. So, can you just debunk some myths for us?
Sure, Swapnanil. There are a few myths which are not entirely true. First is like payout only in the time of death. This is not true. Once the fund matures or the time period of the fund is over, you will get your payment in time. And therefore, payment only in times of death is not true in case of ULIPs. Second is that insurance plans do not give a high return. This is also not true. In case of ULIPs, they are market linked, and therefore you can track your returns through the NAV, which comes out on a daily basis, and they are inflation beating returns provided you take the right asset class at the right time. So in times of need, your money is locked in. That is what another myth that comes in for ULIPs. This is also not true, as one can withdraw the some portion of your money depending upon the product guidelines. So remember, ULIP plans offer the best returns over time. As the market keeps balancing itself out, you will more likely get higher returns if you stay invested for a longer period of time.
Wonderful. This has really opened my mind, Poonam. I've never realized that there's so many aspects to consider while investing a ULIP. Thank you, Poonam, for your time today with us. I'm sure our listeners will agree that this is a great starting point to pick the right ULIP.
It was a pleasure, Swapnanil, to discuss such a crucial financial product, and I hope I have helped you to gain better understanding of ULIPs. Thanks a lot, Swapnanil, for giving me this opportunity.
Absolutely. Thank you so much, Poonam. Today's conversation has changed my perception of ULIP from just another financial product to an instrument that can really help fulfill my dreams while securing my finances. Thank you so much for listening. You can find more episodes like this on our YouTube and your favorite podcast app. Keep listening.